This video is not for beginners because I'm going to give you an advanced daily buyers training course that you will not find anywhere else on YouTube. And I'm going to condense 5 years of trading into however long this video is. And if you can understand everything that I go through in this video, congratulations, you will become a profitable trader. It's only a matter of time. So for daily buyers, the first thing you want to do is get the weekly chart up. And that might sound, contradictory to the name or whatever, but the weekly chart is probably the most important chart. Not probably, is the most important chart in all of trading because, smart money, big banks, Goldman Sachs, whatever you want to call them, they're looking at the weekly chart and the daily chart, and then they're executing on the 4-hour chart. They're not looking at the 5-minute chart, not to do their analysis. And I'll show you in probably the next 2-3 minutes how much you can learn from just the weekly chart alone, right? So here we are on Euro USD, and here we are on the weekly chart. Now, the first thing I like to do when I'm studying daily bias and I'm studying these charts is I like to look for the overall trend, right? I want to look for the most recent trend in price action, right? So I don't care about this bit, I don't care about the choppiness here, right? Because remember, this is the weekly chart, so the emphasis is always on the most recent price action, right? I don't care what happened, in 2021, right? If this was like the 15-minute or 5-minute, I would, but this is the weekly chart, so I don't care about any of this, I don't care about any of this. I only care about the most recent pricing, and it's pretty obvious what price has done. Right, bullish, strong trend. Now, I'm going to show you right now, I'm going to compare this to a few different markets, and I'm going to show you how much we can learn from just this weekly chart, right? So this is euro dollar. Remember this chart, right? And remember this high, and this strong, aggressive move up, right? So here is GBP USD, right? Again, very similar. So let me just show you again. Very similar to euro USD, where we've got this huge move off, and then GBP USD, right? Where we've also got this huge move off, right? Very, very similar. These weekly charts here are very similar. Now you might be wondering, okay, Atif, where am I going with this? What does this really mean? Now watch this. This is really, really important here. Let me just clear this off. This is really important here. So here's euro dollar, here's GBP USD. Let's go look at Australian dollar, right? So remember this high and this high here. Look at this, right? Look at this. This is so important right here because this alone tells you so much. So here's the high on Australian dollar. Let's just get New Zealand dollar up too. Here's the key high that price does not take out, right? Like this. So we've got NZD USD, AUD USD, and then GBP USD. Can you see how price takes out this high right here, right? Now you might hear this be called SMT divergence or just divergence in general. The name does not matter, but this right here in price action is such a key clue on the weekly chart, right? This on the 5-minute or 1-hour chart does not matter, but on the weekly chart, this is smart money screaming at you. And what they're really saying here is, can you see how price took out this high on euro dollar? It does it on GBP USD. It does not do it on AUD USD, and it does not do it on NZD USD, right? What does this mean? Because everyone can spot divergence very easy, right? To pick, hey, it didn't take out this high, but what does this really mean? This is so important, right? So make sure you write this down. This right here is worth its weight in gold, right? And I'll explain why it is later on. I'll show it in gold too, right? Just so you know. What this means is that euro dollar, euro USD is very strong. It's a very, very strong currency. Similarly, with GBP USD, it's also very, very strong, right? Whereas with AUD USD, it's a weak currency, right? It's a weak currency. Same thing with NZD USD, right? The fact that they couldn't take out this high, it's on the weekly chart, right? Not some random, 5-minute, 1-minute chart. On the weekly chart, it's smart money screaming at us that NZD USD is very weak. AUD USD is very weak too, whereas GBP and EU are both very bullish. Now, what does this mean? This means that you only look for longs in euro dollar and GBP USD, and you only look for shorts in AUD and NZD USD, right? Super important. Go rewind that, right? Make sure you only look for shorts in NZD and AUD, right? And only look for longs in GBP and Euro, right? Now, the reason is, and this is so important, and every trader, right? Everyone who's traded has had this, right? Where, let's just imagine, let's just say you're bearish, right? There's some sort of bearish fair value gap. There could even be a liquidity sweep. So if you know what a liquidity sweep is, it's just a stop run. Some old high gets taken, price goes off. There's lots of fair value gaps. You enter into your trade, let's say at fair value gap, order block, Fibonacci, whatever you like, and then price just chops for ages, right? It just chops, it goes down a bit, and it comes up, and then, maybe it just touches your stop loss, and then just chops for ages, right? And price just consolidates. It does nothing, it just chops around, and it's so annoying. And the reason why this happens It's because you go short in a very strong currency, right? You go short in a very strong currency, and this is what you get, right? So you never, ever, ever go short on a strong currency. You never, ever, ever do that, because that's what you're going to get. You're going to get choppy trades, and you're going to lose trades, right? You're going to have so many unnecessary losers, and that alone can take your win rate from 40% to 60%, right? And that right there can make you a millionaire very fast, right? You can make money very, very fast with just this little tip alone, right? This right here saved me so much money. It's insane, right? So GBP and euro dollar, you only look for longs, right? You only look for longs. You do not short this, because if you do, if you short at some fair value gap, price will chop for ages and it will go and take out your stop loss, right? The only currencies, and I'll show you more, analysis later on, but the only currencies you want to be shorting is AUD USD. Look how weak it is, right? It's very weak. As soon as you get into the trade, and you've all had trades like this too, right? Let's imagine there's a fair value gap. You like entering on it. As soon as you enter, price just drops, like, whoa, straight to take profit. And you're like, oh my God. And then, you actually, we've all had this too, right? So let's say you've got your stop here. Let's just imagine there's a fair value gap, random fair value gap here, right? And then you've got your 3 to 1 or whatever you aim for. And then price comes all the way down and you think, oh man, should I aim for like a 10 to 1 or whatever, right? You see this, and the reason why is because you're shorting a weak currency, right? And if you short a weak currency, price will just drop like a brick. Similarly, imagine you buying euro dollar, right? Imagine you buying it from all of this move right here, right? Any retracement you get on euro dollar, let's say there's an order block or whatever, price will just shoot right off to take profit. And you see this over and over and over again, right? So this alone, and notice how I haven't even gone below the weekly chart. This alone tells me right away, euro dollar, GBP USD, I want to look for longs, AUD, and NZD USD, I want to look for shorts. Now, if you understood that, congratulations, because that's very, very advanced. Hopefully I've not scared you off too much, but I'm going to give you almost a little test, right? So all of these currencies have USD at the end. What we're now going to do is look at dollar CAD, dollar Swissy, dollar Swissy, and then dollar yen, right? So what do we notice here? Study this low here. This is the low we care about, right? So let's just mark this down. This is really important right here, right? So here we have price does not take out this low on dollar against the Canadian dollar, right? And then dollar Swissy, right? Look at this. Now, what does this mean? Right, just think about it. Just think for a few seconds. What does this mean? If dollar Swissy took out this low and dollar CAD could not take out this low, right? What do I want to be doing in dollar and the Swiss franc? What do I want to look for, longs, or do I want to look for shorts? Right, hopefully it's pretty obvious that price is so weak, we only want to look for shorts in dollar against the Swiss franc, whereas dollar CAD, relatively is a lot stronger, so we only want to look for longs in dollar CAD. Right away, we can just filter out so many low probability setups, right? So we only look for shorts in dollar Swissy, only look for longs in dollar CAD, right? Now, dollar yen is pretty interesting. What do you see here? All right, think for a few seconds. What do you see in price action here? Right? I see choppiness. I see choppiness, right? And you know how I said, the first thing I always like to do is look at the most recent trend? Well, there's not really a trend here, right? This is a choppy market. And if price, and this is a really, this is a gem right here. I'm giving you a lot of jewelry, aren't I? Right, so we're on the weekly chart. If the weekly chart is consolidating, every other time frame will be consolidating, right? You probably hear ICT and other people talk about price being fractal. What that really means is if price is consolidating on the weekly chart, it will do the exact same thing on the 5-minute chart, right? Like, let's just imagine, forget this is the weekly chart. Let's just imagine this is a 5-minute chart, right? You enter on this fair value gap here. Let me just mark this out, right? Let's imagine you enter on this fair value gap like this. You put your stop typically at the high and you target whatever, right? Liquidity or whatever, and price just chops around, right? Reason this is happening is because price overall, the overall market is consolidating, right? So what that really means is ideally you should avoid this, right? You should avoid it. Overall, it's more bearish than it is bullish, right? Because there's no respect of these order blocks. I know some people love this pair. Look, listen, if you want to go short, easy short. You want to go long, dollar CAD. And of course, you've got euro and GBP, right? Now, let's do the exact same thing on the S&P, right? So here's the S&P. Here's NASDAQ. Here's Dow, right? The 3 golden indices, right? The 3 American indices. What do we notice right away, right? Price does not, on Dow, does not take this out. And this is the exact same thing you'll do on the CFDs, by the way. So don't be scared that it's a futures contract. Exact same analysis works on every market as well, right? You can do it with Bitcoin, and Ethereum. I might do that if we've got time. This is gonna be a long video, right? I think this will be a very long video actually, but it will be good. It will be good, right? So here's the S&P. Sorry, here's the Nasdaq. Nasdaq takes out the high. S&P also takes out the high. What does that mean? It means S&P and Nasdaq are very bullish. We only want to look for longs. And the Dow is also bullish. This is really interesting. It's also bullish, but it's not as bullish as Nasdaq and the S&P 500, right? If you can understand that, congratulations, right? So if we look at AUD USD and NZD USD, right, really important. You can see prices actually moving up, right? You can see it, right? Prices actually moving up on the weekly chart, right? It is slowly moving up, but GBP USD and Euro dollar are moving up way more, right? They're way stronger, right? So overall, you would say, let's say you looked at this point here, you would say, well, actually, it has gone up. It is bullish, but it's not as strong as Euro dollar and GBP USD. Similarly, with the Dow, well, it has gone up, but it's not as strong as Nasdaq and the S&P. And you only want to be in the strongest currencies and the weakest currencies. You do not, and this is super important, you do not want to be in the middle ground, right? So what I mean by that, perfect example, right? Dollar yen, where it's kind of strong, but it's also a bit weak. It doesn't take out the low, but it's chopping around. You do not want to be in that because you're going to get chopped up, right? You want to be in currencies that are dropping like a brick or going to the moon, right? Currencies, indices, whatever you want to call it, or whatever you like to trade. Exact same analysis applies. And let's quickly do gold, right? Because I know everybody loves gold, right? So here's gold, all-time highs, and here's silver, right? Silver obviously being the sister market to gold. And look at silver, right? We're nowhere near all-time highs, right? Overall, nowhere near all-time highs, right? Look at the difference. I mean, I'm not even sure what high it would be. Probably this one. Look at the difference. So what does this mean, right? What does this really mean? It means gold overall is a lot stronger than silver. So we want to look for longs in gold. We want to look for shorts in silver if the setup presents itself, right? But like I said, overall, we are bullish. Silver will be dragged up slowly, lethargically. And we've all been in trades like this. Price will slowly grind up, slowly come up, take out your stop loss, slowly move up. You do not want to be in these trades, right? You do not want to be in these trades, right? You do not want to be in any of those trades. You want to be in the strongest currencies, and you want to be in setup. So as soon as you get tagged in, it goes straight to take profit, right? And you've probably been in both, right? If you've been trading for any length, any length of period or time, right? You've been in both setups where it consolidates for ages, it hits your stop loss, it does nothing, and then trades where as soon as you get in, it just goes straight to take profit, and it smashes right through take profit. And it's because you're in a strong currency and a weak currency. And while we're here, let's just do Bitcoin and Ethereum, right? I don't really look at this too much, so I think that right there is all-time highs. Here's Bitcoin. Here's Ethereum, right? See, I mean, you can see me literally, this is what I do on a day-to-day basis, right? I'm not making this up. So here we go. Here's Ethereum. What does this mean? In fact, this is choppy and a lot more weaker, right, than Bitcoin, right? So Bitcoin, obviously look for longs. It's the strongest out of all the crypto coins. Ethereum, no, right? No. I mean, you can look for shorts if the setup presents itself, but overall, what do we have? A very, very choppy market. Okay, so the next thing we do, and can you just notice, right? I mean, that took about 15 minutes, but can you see how right away we know that Euro dollar, GBP, very strong. Obviously, we want to short AUD, NZD. Same thing with indices, same thing with gold. We've learned so much just by using the weekly chart, right? We already know what we want to do. But what every trader needs to do, doesn't matter whether you trade Bitcoin, indices, gold, especially if you trade gold or Forex, everyone needs to be looking at the dollar, right? If you're not looking at the dollar, you're blind, right? And it might sound harsh, but the reality is, the US is still, the number one economy in the world. What their market does will affect every single market in the world, right? And we'll talk about this later on, especially when we get to Forex. But dollar is seen when the dollar starts to drop, gold will go up massively, right? People will move their money away from dollar into gold, right? Because gold is seen as the store value. But anyway. Here we are on dollar, and most people use Dixie, and I use this for a long time, but instead what I've found is if you type in DX, you should get this, US dollar index futures. Now don't worry, you don't have to pay for the data or anything. What it does is this shows you a lot more gaps in price action, and this is as close to the real price of dollar that we can get, right? So, and for those who don't know, the dollar index is just a dollar against all the major currencies. So it's essentially how strong or weak is the dollar, right? But anyway, here we are on the dollar, and like I said, first thing I like to do, what's the most recent trend, right? Clearly bearish, right? But where are we actually going to? So if you remember in one of the previous videos, I'm not sure which one it was, right? Price was, so can you see this gap right here? This is really important. This is actually a volume imbalance. So you can see my analysis here. Just remove this. This right here is a volume imbalance. This is like a super fair value gap. It's like a really strong fair value gap. So the gap, see how these wicks are covering each other, but there's no like bodies. Right, this gap here is a volume imbalance. Now I think there's loads of different names for it, so don't worry about the name. The name's not important at all, right? It's all about the logic. And I mean, look at this. I mean, almost beautiful, isn't it? It's beautiful how it fills the whole thing up. And if you remember in the last video, I think, not the last video, but a few videos ago, we were at this point in price action, right? We were at this point in price action. I did mention, right, not to brag, but I did mention that I think we were going to fill this entire volume balance because price loves to fill in these gaps. So anyway, what that just tells us is that price, or at least dollar, is bearish. So for me, I like to always have a target in mind for price action. I always like to see, okay, where could price realistically, sensibly go next? And my eyes instantly, and you will get this too with trading, right? See this? You see how we base? So this is the same thing here, right? We have a volume imbalance. We also have another little mess of a volume imbalance. It's almost like 3 candles forming it. But this right here is what I'm more interested in. This right here, right? So let's just zoom out of the chart. Zoom all the way out. Where are we now? So here we go. So this volume imbalance here is the next magnet for price, right? So it'll essentially pull price towards it, unless of course, you know, something crazy happens, or, you know, a war, whatever happens, right? And price shoots off in the other direction. But this is our next logical target for price, right? So if the dollar, and this is really important, this is the most important part of the whole dollar analysis, right? If the dollar is bearish, what does that mean for euro dollar? And just look at this right here, right? We have euro against the US dollar. Most people trade Forex, they have no idea what Forex even is. You have the euro against the US dollar, 2 currencies pegged against each other. So what that means is, let's just think about it. If you've got the euro and dollar's weak, right? Like we can see right here in the charts, dollar is weak and dollar's dropping. What does that mean for euro dollar? Think about it. If the dollar's dropping, what does that mean for euro USD? Is it going to go up? Is it going to go down, or is it going to do nothing? Right, it's going to go up. Right, it's going to go up because the dollar is dropping. So if we get euro dollar up, it's going up massively. Right. Similarly with GBP USD, because we have USD as the other pair that it's paired against. Right. Similarly with euro dollar. Right, literally euro against the dollar, and because the dollar's weak, euro is going to go up. Similarly, I said similarly quite a lot, haven't I? I need to change my vocabulary up. But here we go. Right. GBP USD, dollar's weak, GBP shoots up. And then this is the really important part. Do you know how I said AUD USD is very weak? And it is. Just look at it overall, right? It's dropping massively. Because the dollar is weak and it's dropping, so let's just get this up. Because the dollar, like we said, is dropping, what that means is that AUD USD, even though the Australian dollar itself, so this Australian dollar, the actual country and its currency, is very weak and dropping massively, the dollar is a lot more weaker, or at least relative to the Australian dollar, the dollar is a lot more weaker. So AUD USD will be dragged up, right? Because both currencies are weak, but the US dollar is a lot more weaker. Not a lot more, but it's just a bit more weaker than AUD USD. This is why we get this slow, little lethargic, choppy bit of price moving up, right? That's why we get that, because the Australian dollar itself is bearish, right? But the US dollar is even more bearish, so it slowly drags it up. Same thing with NDD USD, right? That's why price is slowly moving up. And we'll talk more about this when we get onto the lower time frames. But I mean, you can see, right? I can be here literally for hours and hours and hours explaining daily bias, right? But really important. And if you understood that, how the Australian dollar is bearish, but the US dollar is even more bearish, that's why we're slowly dragging up. Congratulations, because I don't think trading gets any more difficult than that. Now, we essentially have our daily bias, right? All that analysis we've done has already told us our daily bias. But, you know, it's not enough just to blindly follow the weekly chart, although the analysis here stands, right? We are super bullish on euro dollar. We want to look for longs and we want to look for shorts here. And same thing with all the other markets. What we really want to see on the lower time frames is 2 things. We want to see confirmation and we want to see targets, right? Like liquidity targets. So what we're going to do now on euro dollar is let's just remove this. We're going to get onto the daily chart and see what we can see. And what we really want to see is just a similar sort of thing, right? We want to see more confirmation. And you can just look at it, right? So let's just look at the daily charts. Let's just go through each, actually, because I think that'll make it a lot more easier, right? So here's the daily chart. I mean, bloody hell, right? Look how obvious this is. Let's just clean all these charts up, right? So here's the daily chart for euro dollar, and we can see we've got order blocks down here. We've got this fair value gap. Price comes up, respects, I guess you would say, this order block here. I know you've got this little doji thing here, and shoots right off. Right, this is what we have on the daily chart. Similarly, GBP USD. Right, I mean, look at the little, there's literally no retracement whatsoever. Price shoots right off, right? AUD USD, I mean, awful, absolutely awful. Now, this is news. I think this is news on the dollar, right? So dollar drops massively. AUD USD is forced up. And then look how weak this is. Look how weak this is. You do not even want to be trading this whatsoever. Maybe, you know, you can look for shorts, but you do not want to be going long in this. Who wants to be going long in this, right? This is the definition of low probability trading, right? This mess right here. NZD USD, bit more. I mean, if you look at AUD, what do you got? AUD USD and NZD USD. New Zealand dollar is slightly more bullish, but really, like, that does not mean to trade it. That does not mean to trade it. So here's NZD USD, right? Now you can tell a lot by just looking at this daily chart. So we know from the weekly analysis, which is the most, you know how I said the weekly chart is the most important time frame right at the beginning of the video. That's why it's the most important, because we can learn so much just from the weekly chart. But here's a little, I mean, I say a little, here's another golden nugget. I mean, giving you a lot of gems right here. But when you're doing daily buys and you've got your overall direction, something that's really interesting, something you really want to look for is obviously the most recent price action now. Because now that we've got our overall macro analysis on the weekly chart, we're looking more, we're thinking more about possible targets and entries, right? That's what, you know, we're thinking about now. So here we are on the daily chart, and can you see this most recent price swing right here? Can you see how there's lots of fair value gaps, right? Okay, well, let's go through GBP USD, and then I can explain the key point here, right? Fair value gap here. There's actually a little baby fair value gap here, and there's another fair value gap here. AUD USD, there's a little one here, but can you see how there's a lack of fair value gaps, right? Similarly, NZD USD, lack of fair value gaps. There's one here, but look at all the lack of fair value gaps. This right here is another gem that I'm going to give you, right? If there's a lack of fair value gaps, price will consolidate. Right, that is the definition of consolidation. A lack of fair value gaps implies consolidation, choppiness, there's no strength, there's no direction in price, right? Whereas look at euro dollar, strong, aggressive, obviously let's just zoom in a bit more, strong, aggressive fair value gaps on the daily chart, not the 5 minute, on the daily chart, right? Similarly with GBP USD, strong, aggressive fair value gaps. AUD USD, lack of fair value gaps in this mess, right? NZD USD. So when you've got strong, big fair value gaps, that just adds to the probability. Now, what does this mean, right? This analysis we've done on the daily chart, it essentially confirms what we saw on the weekly chart. And do you know how I said the weekly chart essentially tells you everything? The only reason we look at the daily chart, really, in my opinion, is just for confirmation. That's the only reason we really look for it, is confirmation. And big, strong fair value gaps is our confirmation, right? And then AUD USD, the lack of it here, right? So this is our confirmation. This is a weak market. We want to look for shorts or avoid it at all. And then this is our confirmation at GBP USD, and euro dollar is very strong. Now, what do we do with this analysis? All we need now is our targets. We know that euro dollar, we know all the markets we've analyzed, we know their direction, we know the strongest ones, we know the weakest ones, we know the ones we want to avoid. All we need now is our targets, right? And I'm going to show you it just on a few currencies, otherwise we'll be here literally forever, right? What we're going to do now is, actually, let's get the 4-hour chart, because people are going to ask about the 4-hour chart. What I like to do on the 4-hour chart is I like to look for liquidity. Now, if we zoom out, there's literally no liquidity that I can see on the 4-hour chart, which is why, this is, again, something for your notes. If you can't find liquidity on the 4-hour chart, you want to go to the daily and then the weekly, or just go to the weekly chart, because, like I said, the weekly chart is probably the most important time frame in trading. But here we are, right? So here's the 4-hour chart. If you're a day trader or scalper, here's your easy target, easy target. Look for any sell, any liquidity sweep. So let's imagine you've got your liquidity sweep here. Price takes out a low, shoots off, fair value gaps, order blocks, Fibonacci, whatever you like, VWAP, ride price off, right? If you're a day trader, scalper, you're looking for this exact setup on the 5 minute, 1 minute, 15 minute chart, whatever you trade. Let's get GBP USD up. Similarly, this is your liquidity target. AUD USD, if you really want to go long, which you shouldn't, right? This would be your target, but price will not even get to that. So I would just avoid this. If you wanted to go short, however, if dollar for whatever reason was going up, this would be your target right here. And similarly, NZD USD, which, you know, at this point right here in price action, because it's slightly more bullish than AUD USD, I'll probably take out this high. But again, you do not want to go long in this, right? This is a mess. Just look at it, right? Complete mess in price action. And you can do the exact same thing with all markets, right? So that right here gives you your easy liquidity objective, your scalper or day trader. I'm just gonna give you one more nugget before we end the video. We want to look for the overall direction of the market, because this liquidity is not that important. It is, you know, fairly important, but the real liquidity is if we go on the higher time frames and look at the overall analysis, right? What is price likely to do next, right? In euro dollar, what is it likely to do next? We know we're bullish. We've just taken out this high here. In fact, let me do something that will help us out. Let's get the horizontal line and put it here. Right, now let's look to the left-hand side of the chart and see what we can see. Now, can you see anything that's a bit interesting around here? Hopefully, because I'm pointing right at it. See this big bearish fair value gap? You just move it up a bit, right? This big bearish fair value gap. This right here, in my opinion, is the next likely place for price to go, right? I think I did mention this in the last video. I'm not sure if I did actually, but you can see the price literally beautifully, almost beautifully taps here, right? So for me, because we're bullish on euro dollar, what I'd like to see is us fill this fair value gap, right? This weekly fair value gap. And if we break through it, and by break through it, I mean wick or, you know, body closes through it, and we've got these highs here, and we've got this fair value gap here, right? But that's an if-then statement. If this happens, then. But for me, this big fair value gap is our next draw on liquidity. This is our next direction for the market. You know how I said with the volume imbalance, this is also going to act as a magnet pulling price towards it. Not as strong as a volume imbalance, but still pretty good. I mean, you can see here, right? Here's another volume imbalance. That price perfectly fills up, right? So let's just mark this out. Like that, right? Beautiful. I mean, literally fills it up exactly and then drops. Price really likes to fill in those volume imbalances. But let's get GBP USD up. For GBP USD, have we taken out this high? Yeah, we have, right? So for me, this is our next high. And in fact, this is my favorite pair, by the way. Absolutely love this pair. And again, here's another important. So that's really important in price actually. Can you see these big numbers here? 1.38, 1.4, 1.39, 1.36, 1.35. These are big numbers. And when smart money and big banks get into and out of their positions, they do it at key numbers just so it's easy to get their orders filled. And they're not going to buy at this price here, like 13695 or 49, right? They're not going to do that. They're going to buy at major levels. So at these levels right here, like 1.38, you guys get the point, right? I mean, you guys get the point, right? 1.38, at that level right there, there will be lots of inbuilt liquidity, right? And what I mean by that is there will be lots of banks and institutions, once that level gets hit, they will start buying or they'll start selling, right? They'll start buying GBP USD because they think it's going to hit 1.4, or they'll start shorting because they think that GBP is overvalued, right? Or invested, right? I mean, it might sound crazy, but there are people and big banks who invest in currencies. They might want to get into a position or get out of that position. So there's lots of liquidity at this level, and you won't hear that anywhere. You're not going to hear that anywhere, are you? That took a lot of years of experience and some insider knowledge to figure that out. But anyway, this is our next draw on liquidity for GBP USD. This 1.38 level, and then this level here. What am I doing? This level right here, which is that big level on the weekly. Oh, we can see it on. Maybe still on the weekly chart. This level right here. Right. Next draw on liquidity. These are our next logical targets. Right. So we know we're strong on GBP USD. We want to look for our targets. These are our next logical targets. So AUD USD. I mean, like we said, you do not want to be trading this at all. Like again, you can just look at it and think, oh, like I don't really know where price is going to go. Yeah, exactly. Like there's no logical targets because it's a choppy market. We want to avoid, right? Big eggs for this market. Again, NZD USD, there is a volume imbalance here. Let's just remove this. Sure, price has filled it. Just tapped it a bit. Price is likely to fill this volume imbalance, but that does not mean that you should go long. It means price will slowly, lethargically, grind its way up, taking out your stop loss, and slowly work its way up, and then fill this fair value gap. You do not want to be in this trade whatsoever. So that right there is how you get your targets. So let's just go through all the markets because I know what people are like. They're going to want to know. So this low right here is likely to be taken out next on dollar CAD, even though dollar Swissy is obviously a lot more bearish. this low will eventually be taken out, right? Because there's no respect of any order block. Look at this fair value gap, this bullish fair value gap. Price just smashes right through. This will be our next logical target, but like I said, it will grind down, right? And then dollar Swissy. This, I mean, look at this. Just remove this. This wick all the way down here on this news event is our next target, but to be honest, it's so far away. So for me, I'd look at big figures on the side. So we've just broke down at 0.8, 0.79. It's the big, I guess, is our next target. I mean, look at that, beautiful. But you can expect a retracement, and this is again another golden nugget, right? This is why I like making these longer videos, because I guess all my wisdom of trading comes out, right? If price is taken out a major liquidity pool, which let's just zoom out. It was actually this liquidity pool. There was equal lows and price drops massively. If it's taken out a major liquidity pool, price will start to retrace back just to generate more liquidity. It's essentially done the damage, so they need to make more liquidity. Because let's be honest, like the next major stop loss orders are down here. There's not really much. There's no liquidity for smart money to target. So you can expect prices, slowly retrace up, fooling traders, and then price will drop down. And you can take out these lows, and you can see that here, right? Where we're generating liquidity at this low here. At this low, let's zoom out. Nobody's got their stop loss. The very few people have it because they know that the Swiss franc's bullish, bearish long term. Sorry, dollar Swissy's bearish long term. So price comes down, gives the illusion of equal lows, then goes off. People are, oh yeah, safe stop loss area. Price quickly and aggressively drops down and to take out their stop loss orders. Just it moves very fast, so they can't move their orders. But these markets, like I say, are highly manipulated. Highly manipulated. Anyway, that's dollar Swissy. Dollar yen. I like to see it take out this low. We filled in this volume imbalance. I like to see us take out this low, which could be a target. By low, I mean these lows, all these lows right here. But again, like I said, does that mean you should be trading it? No, but if price is down here, you may as well target it. And let's get S&P up. This is really important, right? If you're at all-time highs, I like to wait for retracements. Let me make this very clear. Like, I don't just buy, there's no liquidity target. So what I like to see is I want to see price drop, and then let's say price drops and it leaves like a swing high. Imagine this doji is like the swing high. Then you can ride price up and target that high, right? But I don't like to just buy randomly, hoping that price hits some imaginary number, right? Because that's almost like gambling at that point. Similarly with NASDAQ, there's no target. With Dow, let's get the weekly chart up. Get the weekly chart up like this. I'd like to see us make, I don't know if we'll take all-time highs out on Dow, because it looks pretty weak compared to the other two. I'd like to see this high get taken out. Right, we could do something similar to this, where we kind of just wick really high up and then maybe chop and then drop. Who knows what could happen? But like I said, low probability. You do not want to be trading this. And let's get gold up. Everyone loves gold, don't they? So I actually made a separate video, which is on screen now. The previous video I made, which is why I'm still bullish on gold. It's going to take it literally takes a whole video to explain it, right? But make sure you watch that video. Essentially, what's happening is, let's get the 4-hour chart up. So gold's at all-time highs. Right, remember we did the analysis. There's no other liquidity pool here. Gold is at all-time highs. It's just a bit below it, so we do have a bit of a target. What's really going on here is price is essentially, so we've got liquidity here, all-time highs. This liquidity pool was taken out here. What's really happening is price is just going down so it can go up, right? It's going down to give smart money traders a nice place to buy, right? And again, if you remember the volume imbalance I talk about, this right here is your volume imbalance, like that, right? So I'd like to see price do something like this. Take out this liquidity pool here into this volume imbalance and then shoot off. Price is essentially going down to give smart money traders a discount, and then they can buy it cheap, right? And a good way, or the only way they determine that, is by getting the Fibonacci from the low to the high. And below the 50% level is seen as cheap. And you can already tell with all these wicks and dojis that smart money's starting to buy, right? Starting to buy. I hope that makes sense. Very complicated analysis, but it is what it is. And if you want to learn more about gold, there's a full video on screen now that you can check out. But silver, what do I think for silver? Let's get the weekly chart up. Okay, now what's going on here? Let's get the weekly chart up. This is our next high right here. You know what, I'm actually going to do something that I don't normally do. I'm going to get the monthly chart up, just so it's more obvious. Right, monthly chart. Every single high, this is, again, it's for your notes. Every single high on the monthly chart and low, there is so much liquidity, right? It's a whole month worth of trading. This is our next key liquidity pool for silver. So silver, I mean, it's almost right there, right? So if you're a day, let's get the 4-hour chart up now. If you're a day trader or scalper, you look for your entries there. But like I said, you want to be in gold, you don't want to be in silver. Just wait for gold to take out whatever liquidity or even this volume balance. You can even ride price down to this level and then obviously ride the reversal, right? And then last but not least, let's just do Bitcoin, right? I know so many people love Bitcoin. Here we are on the 4-hour chart. This high right here, this high, this high, this high. I think Bitcoin's going to all-time highs. Again, I made another video, you can see on screen now, why I still think Bitcoin's bullish. And you know how I said these markets go down to go up, and they go up to go down? What's really happening here? Bitcoin's bullish. They're generating liquidity. They take out the liquidity, and they can ride price off. Again, all markets, including crypto, highly manipulated and only move for liquidity. And for Ethereum, I expect nothing. I expect chop. In fact, I like to see these fair value gaps here be filled. Just price touch it again. Yeah, nothing to see here. But that is right there is how you do daily buys, weekly analysis, top-down analysis, whatever you want to call it. It's all the exact same thing, which is getting the direction of the market, the overall direction of the market right. And if you do that, and if you understood that, congratulations. You are essentially a profitable trader. But the one thing you do need is a entry pattern. So make sure you check out this video on screen now.